What's going on? What's going on? Welcome back to another episode with your host, Levon Stewart, co-founder, founder, CEO. Um, yeah, this is another episode, Take Profit Tuesdays. Guys, as we always like to start each and every single video. This is not financial advice. If you're not able to withstand the markets, please look up your closest, most nearest someone who's or institution, um, who's registered with the SCE, FRNA, to where you could help them manage your money. You could pay them a commission. That commission will help with their salaries. Where over here, we teach you how to do it independently by yourself, for yourself, and only for that financial literacy. Um, Welcome back, guys. Welcome back. I had a good week. I hope you guys had a good week as well. Again, if you're just not jumping in, support the stream, support the team, support the group, support me by liking, commenting, and subscribing to the video. If you have any questions, throw it in the comments. I'm gonna do my best to get back to it. If not, shoot me an email. But yeah, so what? So it's good news, guys. Good news. If you watched last week's video, or even 2 weeks ago, 3 weeks ago, we talked a lot about what's going on as far as this recent dip in the market, recovering, points to buy in, points to buy out, things are kind of what we're doing. So before we get into the title of this video, I do want to talk about the trading group, the trading, or the what should we call it, where we trade together, right? So what you guys see right in front, if you're just not joining for the first time, if you're just not watching this, each time you see a price tag, that is a point where I'm going to buy in. If you guys wish to get in as much as I do, you guys have more than enough time to jump in, because again, we do these videos weekly. So we got in a kind of a bunch of times since that the whole war happened, and the gas is kind of going crazy, a whole bunch of stuff. Again, just watch the previous videos. We kind of talk about it in a lot of detail, and we use a lot of fundamentals and whatnot. But guys, the goal is to grow this account I have, because again, this is my own money I'm investing in. If you guys wish to partake in as well, you're more than welcome. Let's make some money together. We have already gotten some gains, and we're gonna, well, we're let's see, because I did say I was gonna disclose. We've been doing pretty good, and ever since this last pump, because again, if you watch last week's video, one second, guys. If you watched last week's video, oh, actually, yeah, we're in profit right now. Yeah. So if you watched last week's video, um, we talked about how price code did either one or two things, and well, one or three things. Either it could go up, down, left, right, sideways. So, my prediction were price will go up, come down, react to the zone down here, the support zone, and make higher highs. But guess what? It did something even better. Because I'm also a little bit mad and upset, but this is why we have the four pillars, and the psychology. This is why the psychology is also important too. Because again, even though I was kind of mad it didn't dip, I still profited. The reason why I'm mad at it didn't dip is because I wanted to get into another position to make more money, right? Because if it got deeper, pause. If it got in a little bit lower, then you could have gone to a buy position. And as it's going up to where it is now, I could have made more money than I'm making now, if not probably doubled it. But anyways, so right now we are up $5. Yeah, we're up 2%, 2.2%. So full disclosure, we total invested is 250, and we're up $5.50. So guys, if you got into where we got in, you're not up 2%, guys, and we haven't gotten back to where we originally bought in yet, which is why I'm so excited. But also really mad it did before. So we got a long way to go. We're probably gonna make about, I don't know, another 50 or 20. I don't know. We'll see. But yeah. So again, the goal is to really get an options account. It's something that we really, 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 really need to try. I think I got dividends too from this. Um, but yeah, um, it's really really important to understand the four pillars, because that's like a table, just like a building, just like any structure in life. Um, you need a basis, and throughout my years of trading, throughout my years of growing this business, throughout my years of just understanding myself, if not this whole business industry, that there's a lot of emotions, there's a lot of fear, there's a lot of indecision, there's a lot of not planning, there's a lot of you know what I like to say, bad relationships with money. And this is why we're going to talk about today's episode about capital. And we're going to talk about some news too. I got it set up as well, but I want to jump into as far as the topic. So capital, right? What's capital? So those of you who don't know what capital is just the money you have available to invest, right? If let's say you have a 9 to 5, that capital could be from your income. You could put into what have you, CDs, investments, oil, what have you, right? So now the capital. So the reason why pillar one is capital is because you can't do anything. You can't do anything. I repeat, if you're watching this and let's say you're like 16 years old, you don't have a job, but you've seen a lot of people on Instagram or YouTube, what have you, and they're just flaunting their money because they've done so much money trading. More likely than not, if they're not showing you how to do it, they're probably not making that much money. Um, and it is what it is. And for that 16-year-old itself, now you probably don't have a job, right? You're probably still in school, right? I was in your shoes at one point. But now let's say next year now, or even the year after, when you're 17, 18, you do get that job. Let's say it's a fast food job where you can pretty much earn like a minimum wage kind of salary. But the thing is, I would recommend, if you're that individual now, take the time out to practice, right? There's many platforms where you could practice trading, trading with paper money or demo trading, or even have a parent, guardian, or whoever. They could open a custodial account for you to where you could practice with real money. You can have your own experience, right? Because as you get older, you're gonna somewhat almost always use these same pillars in almost your everyday life, right? You have your capital, you have your strategy, you have your risk management, and psychology. So the reason why you need the capital now is because, again, you could trade or paper money. Oh, you can. It's fun. You could open up a $1 million account and trade it to a billion, and you'll just be rolling and rolling in money. Like, yeah, man, look, I just made 5,000. I'll say, I lost 100,000, but I'm gonna make a million back the next day. Yeah, you can have those kind of talks, but guess what? It's not real money. So as fun as it is, it's not real. So if you're that 16, 17-year-old, 18-year-old, let's say 20, right? 19, 20, 21. Again, as you get older, realistically, you'll be going through high school, college. Even in college, you probably won't even have a job, right? Probably too busy with school and partying and whatnot. Or let's say you do have a job. You have a job on campus. So you make a little bit of money. So you want to make a little bit more money, right? So again, what I recommend to you, those who are young ages, I would definitely spend the time at least learning the basics of this, because this is a, what they call it, a muscle that you keep working. It's like learning anything, right, in life. It's all theory. When you go to school, you're learning all theory, but when you go to like a technical school, you're practicing with your hands, and with that practicing, you can actually apply it to the real world. So think of this like a technical kind of skill set where you kind of have to understand what's going on, have to do a little bit of research, so on and so forth, right? And if you're again an individual who's able to make those smart financial decisions as you get older, you would learn different ways to grow your money, protect your money, diversify your money, so you don't have all your money stuck in one bank account. Bank account. You don't have all your money stuck in under your mattress. You don't have your money stuck into one cryptocurrency that may tank. You don't have your money stuck into a stock, bonds. You could diversify your money however you like, and that's the beauty of it. As you get older, you get more knowledgeable, or you link minds with other people who are more knowledgeable than you. That could show you what to do, and it's amazing. It's really good. So, as far as capital now goes, and as it's always been going, you have to work or make of some form of income in order to play the game. You go to a casino, you need to pay to play the game. You go to college, you need to pay to play the game. You go to wherever you go, a store, um, and nothing in life is free. So either way, you have to have the capital. And your relationship with the capital is also very important too. You have to have a good relationship with money. So now, when I say this, don't think that, oh, okay, I make minimum wage. I'm able to let's say you live with your people, your parents or your people. And you have a little bit, after all bills are paid, after all things that you need to pay for that check or what have you, that month's salary or that annual salary, what have you. Again, you have a little bit more discretionary money, right? So not only are you gonna put that discretionary money aside, because if you're smart enough, you would have that bill already would be a savings bill. So that bill that you save is gonna go to automatically savings account as you build up. You're gonna have a little bit more discretionary money after that to put into an investment account or brokerage firm, so on and so forth, to where you could start investing your money, or you could diversify money in different ways. So I would not recommend, and again, it's not financial advice, so I'm not going to advise anyone, but I would not recommend. So it's more beneficial if, after all things are said and done and paid for, aka being responsible, you take that money, the rest what's left, the discretionary money, and let's say you want to invest it. Just put $100, $50, start small. You don't have to, even nowadays with these platforms, aka Robinhood, you don't even have to have $1 million or 1,000 or 50. You could start as low as $1, and you could buy like penny stocks, right? Or you can find a broker that can help you with that as well. So enough of my spiel, because I've been talking for 14 minutes. Let's talk about some what's going on in the news. 1 second. All right, so a lot's going on with the news. For my followers out there that follow cryptocurrency, this is probably gonna affect your portfolio as well as it did in mine. But it's like I said in my previous videos, guys. Every day is an opportunity. So if something dips, it's an opportunity. If something skyrockets high, it's an opportunity. So don't get yourself too bottled. Again, pillar 4, gotta have that psychology, right? So this one's titled "FTX Bust and Crypto Crash Come with Two Silver Linings." This is by Brian Sozi. Shout outs to him for this article that we're gonna break down. So let's look at the bright side of the FTX driven crypto crash to kick off what will likely be another long week for the industry. So those who don't know, apparently FTX is having a liquidity issue. Binance was trying to step in. We talked about this last week. Binance was trying to step in to help with this liquidity issue. It seems like things are not going as planned, but let's continue. There are probably two positive worth considering here. First, the cryptocurrency crash has not spread over into the stock market, which is a plus, as we just broke down, right? The S&P is up that amount in the past 5 trading sessions compared to that amount from the Bitcoin dip. You ask why? Simple. The root is not the root. The route is not as huge as the headline suggests. We think Bitcoin and ETH remain too small part of the market to cause a broader financial contagion. With the total crypto market cap size 890 billion versus 41 trillion. Actually, crypto was at 1.16 trillion, I believe, at one point, if not a little bit more than the U.S. equities. Because at one point, guys, it was everyone's buying into crypto. Then that big the dip happened after it hit 60K, which is fine. We'll see what's gonna happen. Citigroup Digital Assets Analysis. Joseph said in a note to clients, the FTX shortfall is relatively small in comparison to other crypto events, such as the Luna 40 billion loss. We all know about that. Market cap losses in public tech names. So there's that. Let's continue. All right. So, and two, what has happened with FTX should ultimately set the groundwork for a more stable crypto market over time, hopefully. Maybe that means less booms and busts, which is a positive for investors, right? Because again, a boom and a bust, depending on which side you're on, depending on how you're, working with the four pillars, it could be in your benefit, guys. There are a couple of reasons for that, such as regulators coming in the next year with new guardrails and the washout moving forth. Maybe fewer crypto events in the Bahamas with Lambos parked outside for the gram. He's talking about the influencers and back that bad actors. We're looking at you, SBF. What we have witnessed in the past week is a flush out, and it's all good, even if there's pain to be had today. This should be a wake up call that what you thought was worth something is actually not worth anything, said the analyst. Happy trading for all of you, even crypto. Yeah, shouts to you, man. Again, man, it's just crazy how they